Well, in the last video, we covered Michael Burry's 13F filing. Now, next on the list is, of course, you guessed it, Mr. Warren Buffett. Without a doubt, Warren Buffett is the super investor that I follow personally the closest. I mean, for me, everything about his strategy just makes logical sense in my brain. And with that strategy, Buffett has certainly achieved some impressive long-term performance results. Since 1965, he's generated returns of 20% annually through his company, Berkshire Hathaway, about double the annual return of the S&P 500. So, without question, he is the world's best investor, but he has been criticized in recent times for keeping a lot of his money on the sidelines despite the market posting amazing returns. So with Buffett's 13F filing released just the other day, let's have a look at whether he has been putting any of that cash to use in the past few months. What is he buying? What is he selling? Let's find out. This video is brought to you by ShareSite. Sick of tracking your performance manually? Track capital gains, dividends, and currency fluctuations easily, and when it comes to tax time, have everything you need ready to go with just a click of a button. Try ShareSite for free or use the referral link in the description to get 4 months free when you sign up to an annual plan. So Berkshire Hathaway currently has a cash pile of about $140 billion. They have $39 billion in cash and cash equivalents, and then about $102 billion in short-term US treasuries. So no doubt that is a lot of cash. And then if we jump down a few lines on the balance sheet, we can see investments in equity securities. This is Berkshire Hathaway's stock portfolio, and the value is currently $308 billion. Now that is a big portfolio, but this also shows that Buffett's cash pile is about 30% of his total portfolio. That is crazy. For a small investor like us, 30% in cash is still pretty decent, but for a big investor like him, it's almost unheard of. So this means he's certainly not finding many good opportunities in the market at the moment. And it's not from a lack of trying, because remember back a few years ago in his letter to shareholders, he said, literally, in the years ahead, we hope to move much of our excess liquidity into businesses that Berkshire will permanently own. The immediate prospects for that, however, are not good. Prices are sky high for businesses possessing decent long-term prospects. So the unfortunate reality is that Buffett is really struggling to find investments that would be value adding to Berkshire at current market prices. And remember, for Buffett, the pool of stocks he can buy from is really quite limited. Remember, he's only interested in making a position that will shift the needle for Berkshire Hathaway. He's looking to deploy literally tens of billions of dollars. So imagine an insurance company, posting 30% year-on-year growth, great management, that'd be right in Buffett's hitting zone. If that company had a market cap of, say, 1 billion, Buffett would not even touch it. It's just not going to shift the needle. So he's limited by his size to a select group of very large businesses, and then from there he has to try and find value. And that's something that he's finding particularly challenging right now when the market is artificially inflated by obviously ultra low interest rates. But with that said, what did Buffett do this quarter? Well, yes, there were still some moves, but to be honest, nothing really eye-catching like what we were seeing over the past few quarters. So Berkshire Hathaway overall added to 4 stocks. They bought 1 new stock, they reduced in 11, and they sold out of 2. And interestingly, when you look at the percentage impact to the portfolio, Buffett sold much more than he bought. So Buffett was a net seller of stocks in Q2, which honestly doesn't surprise me because the market has just kept going up, going from bad to worse. Alrighty, so let's now focus in on these stock moves. In terms of his new buy, this stock is Organon, which is a pharmaceutical company in the US which specializes in reproductive medicine, contraception, psychiatry, hormone replacement therapy, and anesthesia. Now, I'm certainly not going to pretend that I know everything about this company, but they do make a big long list of medications, even the hay fever nasal spray that I bought yesterday. Who would have thought? But back on topic, this was only a very small buy. It was 0.02% of Berkshire's portfolio. And actually what I learned about Organon is they actually just spun off of Merck, and Merck shareholders received 1/10 of an Organon share for every Merck share that they owned. So this is actually likely just Buffett's portion of Organon stock he received from the spin-off as he does have a decent position in Merck already. All right, then moving on, Berkshire also added to Kroger, Aon, and RH. So Kroger now sits at position 15 in the Berkshire portfolio, occupying 0.81%. RH is number 23 with 0.42%, and Aon sits at number 24 with 0.36%. But again, nothing crazy here. These additions were small, the biggest being the 21% increase to Kroger, which makes sense. I mean, they've been adding quite heavily to that position since Q2 2020, as the stock has been in the 30s. So clearly Buffett sees it being undervalued in that range, but will be interesting to see if he's keen to add to it during this current quarter, as now the stock has shot up to the mid 40s. But anyway, those were the buys. Really not too much to sink our teeth into right there. So let's turn our attention to the sells. So Berkshire reduced in 8 stocks during Q2, with the most notable being in the pharmaceutical companies. Buffett reduced 50% in Merck, and then just 15% in Bristol Myers Squibb and 10% in AbbVie. So Buffett initially bought all these stocks together in Q3 of 2020, along with Pfizer. Now, surprisingly, he ditched Pfizer in Q4, but he did hold on to these other stocks. And it was that reason that I thought that this probably wasn't a vaccine play. I genuinely think Buffett just wanted his conglomerate Berkshire to have broad exposure to pharmaceuticals, and I guess they all seemed fairly priced at the time, so it all made sense. Maybe initially he just went a little bit too gung-ho, so maybe he wanted to trim 10 to 15%, but you know, the Merck reduction of 50% does seem strange. Maybe he's decided, like Pfizer, that he doesn't really want to hold it as much as the others, so it will be interesting to see if he continues to sell in this current quarter. But anyway, that's the story with the pharmaceuticals, trimming 2 and then halving the position in Merck. But then Buffett also reduced 10% in General Motors. Now, this is one of Buffett's long-term stocks. It's his number 12 in his portfolio, and he's held it since 2012. However, over the past few quarters, he has been trimming this one down. He sold 10% in Q4 last year, then 8% in Q1 2021, and now 10% in Q2. And, you know, honestly, I'm not surprised that he's less bullish on this one. I mean, to be perfectly frank, I think GM is one of Buffett's worst stocks. I mean, their revenue has just been sinking over the past 5 years, as has their net income, as has like everything about their business. And they're essentially being dragged kicking and screaming into building electric vehicles. They don't seem to really want to do it. But, you know, clearly Buffett still sees something in their future and has that as his 12th largest position, occupying only 1.2% of Berkshire's portfolio. So overall, they were the notable reductions. And then lastly, the sells. So Axalta Coating Systems, Biogen, and Liberty Global, but nothing to really talk about here either, unfortunately. These sells had basically no impact to the portfolio. The biggest sell was Axalta, which makes a variety of paint and coating products. The sell there reduced the portfolio by 0.15%. But honestly, like, that's about it. A pretty boring quarter for Warren Buffett. Certainly doesn't help us value investing YouTubers, that's for damn sure. But, you know, I do think that this quarter still shows us a few things. Buffett's quarter still shows us a couple of things. There are a few takeaways. Firstly, it shows us that I think Buffett is pretty happy with his core holdings, because remember, Berkshire is very top heavy. The top 10 account for 87.5% of their portfolio. And the only change in the top 10 this quarter was GM, which slipped from 10th to 12th. So that tells me Buffett is pretty happy holding his big positions. You know, Apple, Bank of America, American Express, Coke, Kraft Heinz, Moody's, Verizon, US Bancorp, DaVita Healthcare. I think he's sitting pretty with that portfolio. So that's really my first takeaway. And then my second takeaway is obviously what we were talking about at the start of the video, that Buffett just really isn't finding anything good to sink money into right now. He isn't, you know, able to deploy any of that cash into new investments because the prices are too high, and he doesn't even want to put more cash into his pre-existing large equity investments because the prices are too high. Honestly, most Buffett-style investors have also been finding the exact same problem, and if I'm being perfectly frank, perfectly honest, I think we're probably going to have to see a pretty decent sell-off or recession before a lot of these businesses get to a reasonable valuation that justifies investment. Doesn't even have to be cheap, just a reasonable valuation. But overall, that's what I took out of Buffett's latest 13F filing. I'd love to hear what you guys thought of it, and whether you agree or disagree that finding value is difficult in today's market. So leave that stuff down in the comments section below. If you enjoyed the video or if you found it useful, then leave a like on it. I really appreciate it, and it helps the video out in the YouTube search algorithm. So definitely appreciate that. If you want to, feel free to subscribe to the channel if you haven't done so already, if you want to see more of these videos fed to you in your subscription box. If you want to check out how I go about my investing, the Warren Buffett style strategy, you can check out Introduction to Stock Analysis, Passive Investing, you can check out Stock Market Investing for Beginners. They are 2 courses hosted over on PROFITFUL, which is the business that I started. So if you wanted to check that out, feel free to do so. But guys, that will just about do us for today. I hope you enjoyed the video, and I'll see you guys in the next one. Thanks again to ShareSite for sponsoring this video. So recently I finally decided to stop being lazy and I imported all of my stock portfolios across into ShareSite. Finally, I should have done that a hell of a lot sooner. So with ShareSite, you sign up, you link your ShareSite account with your stockbroker, or you just add your positions manually. And then from there, ShareSite tracks everything for you. It tracks your capital gains, it tracks your dividends, it'll track your dividend reinvestment plans, it'll track gains and losses from currency fluctuations. Seriously, this is by far the most thorough portfolio tracker I have ever seen. And because they track and record everything so thoroughly, they can provide you with all of these reports. So from literally simple performance reports to complex predicted future cash flow reports if you're a dividend investor. But here's the really good thing, they also provide all of these detailed reports for tax time. So send these reports to your accountant, done. Plug these numbers into your tax return, done. Simple as that. It's a big, big help. And most of these features are available for free, but to be honest, to get the best experience, I would personally bite the bullet and upgrade to a paid plan. Honestly, this is one of the few stock market related subscriptions that I would actually recommend. It's very, very helpful, particularly when it comes to tax time. Anyway, if you did want to sign up, simply use the referral link in the description, or you can go to sharesite.com/newmoney, and ShareSite will give you a special offer of 4 months free when you sign up to an annual plan. So at least sign up for the free plan. It will make your life easier. But that's it for today, guys. Thanks very much to ShareSite for sponsoring this content, and I'll see you guys next time.